The crypto market in 2025 looks nothing like it did just a few years ago. Some coins are flying, others are fading, but what's really driving the top 5? I'm Brett at CryptoGX, and in this video, I'll break down the top 5 cryptos of 2025 and reveal what's really behind their massive market caps. You'll learn what really gives them value, what risks are hiding underneath, and what this could mean for your next trade, so stay till the end. Let's start by talking about market cap. Market cap means the total value of a coin's supply. You get it by multiplying the price of one coin by the number of coins in circulation. Now, the bigger the market cap, the more weight that coin has in the overall market. It's kind of like how Apple or Amazon dominate the stock market. Their size is what makes them hard to move, and they're also safer during big crashes. As you can see right here, the top 5 coins right now are Bitcoin, Ethereum, BNB, Tether, and XRP. But each one of these holds its spot for very different reasons, and it's not just hype. So Bitcoin still leads the pack. Every 4 years, its new supply gets cut in half. This is called a halving. It's kind of like gold mining. Over time gets slower, so the remaining gold becomes more valuable. Here's a chart of the Bitcoin halving events, basically when that supply gets cut. And as you can clearly see, that means that the Bitcoin halving has sparked a bull run, which a bull run is a long period where prices steadily climb over, however long. Now in 2024, the approval of the first Bitcoin spot ETF brought in billions of dollars in institutional money. And an ETF is something I've talked about a lot on the channel. It's an exchange traded fund. It lets regular investors buy Bitcoin through stock markets or through brokerages, really. So you don't need a crypto wallet. It makes it a lot easier for regular investors to get into crypto. These ETF inflows helped push Bitcoin past 70,000 in 2024 and gave it some fresh momentum heading into 2025, pushing it to new all-time highs, and now we're up at the $125,000 range. Next up is Ethereum. Ethereum isn't really just a coin, it's actually a whole network that powers other projects. Developers use it to build smart contracts, which basically is self-running code that replaces a middleman. And it also fuels decentralized finance, where people lend and borrow and earn interest without banks. AI companies even use Ethereum-based tokens for data and compute payments, basically driving for more demand of Ethereum. Ethereum also benefits from ETFs. The SEC actually finally approved spot Ethereum ETFs in 2025, bringing in a ton more institutional buyers. Next up is Binance Coin, or BNB. This powers the Binance ecosystem and is one of the biggest crypto exchanges in the world. Now, people use BNB to pay trading fees at a discount. They also join token launches with this and move money across Binance's blockchain. It's kind of like using air miles, but for crypto trading. Now, Binance's value depends heavily on their business, so when trading volume rises, demand for BNB rises too. But if regulators start tightening anything regarding BNB, or there's kind of issues with SEC disputes, it could take a hit as well. Next up is Tether, also known as USDT. This one is not really exciting when it comes to price changes, but it is a stable coin. It's a token that is tied to the US dollar. One Tether equals $1, so it does not swing in price. Now, stablecoins let traders move money quickly between exchanges without needing a bank. They also act like parking spots during market crashes, so you can put your money there and save it for when you want to invest in a crypto that the price is actually going to move for. Tether's dominance shows that liquidity is key to crypto's survival. Liquidity is just kind of how easily money moves around. Now, on the other hand, it's also kind of controversial because its reserves at Tether are not fully transparent. Now, as you can see here, they're trying to make it look like they have transparency. They report their own numbers on, the currency being backed by reserves, but it's not audited by a third party. Next up, we have XRP. Now, they essentially created XRP to connect banks. It's a network on RippleNet, and it lets money move across borders in seconds, and it kind of replaces the slow systems in the banking world like SWIFT. SWIFT is just a transaction system used in banking currently. Now, XRP doesn't use mining. XRP runs on a very quick, energy-efficient consensus system that confirms transactions almost immediately, as you can see with their large amount of transactions being processed in a short amount of time. You can see on their website a lot more about what exactly XRP is and what they're trying to do, and I've got another video on the channel about that, so you should definitely subscribe and check that out. But the thing with XRP is, even though they have tons of partnerships with banks, they have had a tough road when it comes to the SEC and regulations. Now, luckily for them, they won their lawsuit against the SEC in 2023, and since then they've regained a lot of trust and lots more banking partnerships, so they're looking pretty strong. So how do these 5 largest cryptos fit into the bigger picture, and what's really fueling the bull run in 2025? Well, first, a bull run obviously is those climbing prices, basically overall positive sentiment in the market, just so you know. In this cycle, it's not just hype, it's a lot of mainstream adoption. As we talked about before, ETFs made it easier for Wall Street to be buying in. There are AI companies that are using crypto for payments and data marketplaces, and even government governments are testing digital currencies. Now there's also still risks, there's regulatory changes, potential hacking concerns, and over leverage, which can flip a bull run pretty fast. So it's smart to have a plan, not just be chasing the green candles. So let's start with a checklist to see if we're off to a good start. You're going to start with a core portfolio, bigger, safer coins like Bitcoin and Ethereum. Then you're going to add what are called satellites. These are smaller, riskier bets. After that, use dollar cost averaging. It is a tried and true method to basically having a better performance over time. You're going to buy small amounts over time rather than one big lump sum all at once. It smooths out the up and downs so that you have kind of a better average price than if you were to buy right today, and then what do you know, maybe tomorrow it drops and you could have bought it at a lower price. Next, you're going to remember to rebalance. Adjust your holdings back to your target mix every few months so that one coin doesn't take over your portfolio. And I've got a video on the channel about basically starting your own portfolio from the ground up and using some help from AI tools as well, so I recommend you check that one out. So to sum up, the top 5 cryptos didn't get here by accident. Each represents a different slice of the market with things like security, utility, stability, ecosystem, and speed. Now the real story behind their market cap is people's confidence in them. People believe in these networks and they will years from now as well. That belief is their entire value. So whether you're stacking Bitcoin or chasing whatever the next XRP or next Ethereum, just remember market cap is just a number and it's a mirror of trust. Now if you want to get some crypto of your own, I put some links in the description for Coinbase and Crypto.com where you'll get at least $50 in free crypto just for signing up with those links. And if you want to get into meme coins, I also left a link to MoonShot where you can claim some free meme coins when you sign up. If you learned something new or just enjoyed the video, make sure to hit that like button and hit subscribe if you want to stay tuned for all things crypto. Thanks for watching. I'll catch you in the next one.